I'm Lynn Norusis with the Focus on Nova team with Century 21 Redwood Realty. And today we are here with settlement attorney from Highland Title, Scott Mozingo. And we're doing a little Dave Letterman top 10, except today we're doing top 5, and we are talking about top 5 tips for assumption loans if you're thinking about doing them. So before we get into your list that you have thankfully put together for us, one thing before you can even decide if you want to do an assumption loan is to find out if you are going to be able to afford it. So you have your today's sales price. You have to find out how much that person, that seller, has remaining on his or her loan. And then whatever that difference is, you're going to have to make up for it. That can either be with cash or potentially having to do a second loan. So if those numbers work out for you, and if you have more questions about it, by all means get in touch. Then once you've decided, yes, an assumption is something that we can do, we have our top 5 tips from Scott as to how to get through it and what to know.
All right, well, like Lynn was saying, once you find out if you have the money and see what that difference between the sales price and the loan are, then we start asking some real questions, get into that assumption. So the first one is, what type of loan is being assumed? So your conventional loans typically cannot be assumed, but VA and FHA can. So with the VA, that's going to spring some other questions in there. So you want to find out first, VA or FHA, and then we can go to question number 2. So if it's a VA loan, is the buyer VA eligible? If they're not VA eligible and they want to assume that loan, what's going to happen is the seller's VA loan is going to get tied up with that new buyer. So if that buyer holds on to that loan for 15 years, that seller's VA eligibility is tied up. So if you are the VA seller, you especially want to really look for somebody that can maybe substitute in their own eligibility to make sure that they can take over that and your eligibility is freed up. And then number 3, make sure the buyer will be substituted in place of the seller and the seller is no longer liable for the loan. So it's not just about the eligibility, but you also want to make sure that you go through the steps properly to get the buyer substituted in.
You don't want to be holding on to somebody else's loan or on the line for it.
That's right, yeah. You don't want to sell the house, somebody else moves in, and then they stop making payments, and your credit gets dinged, and the bank starts coming after you. So you would definitely want to make sure that buyer has been all the way substituted in, and it's just them responsible for the loan.
And the way to go about that is the buyer is really just going through kind of that pre-approval process. Can they afford this this loan that is going to be moving over to them?
Correct. As part of that assumption, it almost looks like getting approved for their own loan, but they're talking to the seller's lender. So it's a little bit weird in that aspect, and you've got a lender you've got to go through, and that's the seller's lender. But once you get approved, they can substitute you in, and then the seller is off the hook.
And then tip number 4.
All right, so each lender is different. Find out what they require. So I think you found this out with one that you're dealing with. So it's a lot of work to kind of get with that lender, see what they need. So I can't give you, this is the 7 things that they need. Each lender is going to have their own list of what they want just to kind of get the process started. And then it goes to qualifying that buyer and make sure that they actually qualify for the loan.
Correct. Yes. It is not a cookie cutter situation
no,
by any means.
And I think the banks are still trying to figure it out themselves, right? They are kind of ramping up. Assumptions are a new thing. We haven't seen them in about 25 years. And so they're trying to find people at the bank that know how to do these as well. So so that would lead us to the next thing.
Which is top tip.
Patience. Don't plan on a quick settlement. This is not going to be a 30 or 45-day turnaround like your normal loan.
Maybe not even a 60 or 90-day turnaround.
Yeah. It's funny when you get to about day 45 and the bank asks for 45 more days, right? So just realize that this is not going to be a quick, but if you're talking about an interest rate of, where we are now, maybe 6.5, 7 down to 2.5, 3. I mean, that's a huge difference and a real benefit to your buyer.
Your patience would pay off in that scenario.
That's right, yeah. So good to have a loan for the next 20 years at 2.5, 3%. And maybe it took you 30 or 45 days longer. So definitely worth it, but you got to make sure that the seller and the buyer are both willing to kind of wait this out. If you have a buyer that needs to be in 30 days, assumption's probably not going to work.
No. And I would also say, so going through an assumption right now with one of my buyers, it's patience not only on the timing, but it's also it's an interesting transaction for the realtor's side because It is very much everybody's working together.
Yeah.
The seller and the buyer the seller has to be a lot more involved in this type of transaction than they would a traditional transaction. The real estate agents need to have some patience because we don't have as much access to what's happening as we do in a typical transaction.
Yeah, with that seller, it's their loans. They've got to
Right.
give permission for everybody to have the authority to talk to that lender.
Exactly.
And so they kind of have to be involved in that process of making sure that the buyer and the agents all have the approval and the title company to talk to them about it.
Exactly. And it's a process that in certain circumstances, I mean, it's a no-brainer to do an assumption.
Right.
But there are certain things that have to line up perfectly for everybody because it can make, in the scenario I'm in, everybody so far is playing very nicely with each other, and it was the absolute perfect scenario to do an assumption.
Yep.
So it can work. We are thinking maybe as they get a little bit more ramped up, involved,
Yeah, I think the banks will
they
start
might
to
get
staff
a little
up
easier
and
to do.
kind of have their schedule down of what they want. So once they kind of get the underwriting figured out and how they want to do it, I think it'll start to flow a little easier.
Yes.
Hopefully.
So hopefully.
Yes.
Yes, hopefully. Hopefully is always the word of the day.
That's right.
So thank you very much for joining us today. I'm Lynn Norusis with the Focus on Nova team with Century 21 Redwood Realty. And this is Scott Mozingo,
Thank you.
settlement attorney with Highland Title. They are here to help you with any of your closings and answer any questions. They've always been an absolute fantastic resource for us realtors as well.
Well, thank you very much. I appreciate you having me on here.
Yep. All right. Thanks, guys.